Dear Chartered Accountants, working professionals, and students in the domains of Indian auditing, accounting, and the tax and regulatory space, welcome to podcast of Fca Deepak Rao, a practicing Chartered Accountant.
Daily news and updates for 4th January 2024. The Income Tax Department has recently launched an updated Excel-based utility for filing income tax returns. Covering a spectrum from ITR 1 to ITR 7, this utility is designed to cater to the diverse filing needs of taxpayers for the financial year 2022-23 corresponding to the assessment year 2023-24. The RBI has issued comprehensive guidelines on the measures to be put in place by the banks covering various aspects of classifying accounts and deposits as inoperative accounts and unclaimed deposits. The central bank called for steps to trace the customers of inoperative accounts or unclaimed deposits, including their nominees or legal heirs, for reactivation of accounts, settlement of claims, or closure. Also, the RBI stressed a periodic review of such accounts and deposits, measures to prevent fraud in such accounts or deposits, and grievance redressal mechanisms for quick resolution of complaints. The RBI has further instructed banks that no charges must be levied for the reactivation of inoperative accounts. Concerning the interest on savings accounts, the RBI has clearly instructed that interest on savings accounts shall be credited regularly, irrespective of the fact that the account is in operation or not. The revised instructions shall come into effect from April 1st, 2024. In a record year for car sales, only 4 companies, Hyundai, Tata Motors, Mahindra & Mahindra and Toyota, hit new highs amid weak demand at the lower end of the market. Market leader Maruti Suzuki got to 1.71 million units, but that was still short of its pre-COVID record of 1.73 million units registered in 2018. When it comes to buying big-ticket items like smartphones and televisions, consumers are moving back to brick-and-mortar stores from e-commerce, while it's the opposite for daily necessities, according to companies and market researchers. The share of e-commerce in total smartphone sales was 45% in 2023, compared with 48 to 49% in 2021 and 2022. For products such as televisions, the contribution has dropped to 29 to 30% from 34% last year, while for washing machines, it is down to 18 to 19% from 21%. However, the opposite is observed in the case of FMCG products. For fast-moving consumer goods, companies like ITC, Imami, Marico, Parle Products, and Dabur have reported a growth of 3 to 5% points in e-commerce contribution in the last 1 to 2 years, driven largely by quick commerce.
This podcast is sponsored by Sound of CA. We share because we care. Vande Mataram, Jai Hind.